Good afternoon, everyone, and thank you all for joining us. I would like to welcome you to the second Development Roundtable of the semester. My name is Brendan McMullen. I'm a first-year student at SAIS and this year's Development Roundtable coordinator. The Development Roundtable is a high-profile speaker series where leaders and scholars within the international development sphere address our community on trends and challenges shaping the field. Before we get started, I want to go over some of the basics of this virtual webinar. This event will be recorded and the chat feature will be disabled. However, if you have questions, and we hope that you do, you can type your questions in the Q&A feature at any time. When typing your questions, please indicate your organization and which panelist you are addressing, just as you would if this were an in-person session. Our virtual webinar today is with an esteemed guest, Michael Schlein, President and CEO of Accion, who will be discussing creating resiliency in response to the coronavirus pandemic through digital innovation. Michael brings nearly 30 years of international banking experience, management, and public service experience to his role as President and CEO of Accion. He is responsible for creating and implementing Accion's strategy, managing its global team, and building a high-performing organization. Before Accion, Michael served as President of Citigroup's International Franchise Management, as Chief of Staff in the U.S. Securities and Exchange Commission, and New York City Hall in the Dinkins and Koch administrations. He currently serves as a chairperson in the New York City Economic Development Corporation. Also on today's panel, we're privileged to have Vikas Raj, who will briefly respond to Michael's presentation and will be available for Q&A. Vikas is an adjunct professor of financial inclusion at SAIS and is the managing director of Accion Venture Lab, Accion's seed stage investment initiative in fintech for the underserved. I would like to thank you all for joining us today, and I would like to give special thanks to our panelists. I will now hand it over to Michael, who will begin his presentation. Michael, over to you.
Okay, thank you. Thank you so much, Brendan. Thank you, Professor Nagpal. Thank you, SAIS. Thank you, everyone, for coming out today. Before I get started, I want to just spend a minute and talk about what I think of as a very special relationship that Accion has had with SAIS for many, many years now. Several of the senior staff at Accion have taught there, and we have recruited there, and SAIS is just such a leader in this field, and it's a pleasure to be with you today. This is the first time I'm speaking to you, but I hope it's not the last time. It's an honor for me to be here with you. Let me start by stating the obvious. In the last several decades, we have seen enormous progress in the reduction of global poverty, historic levels of progress. We've seen billions of people move out of poverty over the last several years, and over the last decade, we've seen incredible progress in advancements in financial inclusion, bringing people into the financial system. I think the global pandemic is putting all of that progress at risk. I think for the first time, we're seeing reversals. We're seeing people fall back into poverty at a significant level. The World Bank put out estimates saying more than 100 million people will fall back into extreme poverty. And if you look beyond extreme poverty, the number is hundreds of millions of people. And I do think for the first time at a grand scale, we're seeing people becoming excluded from the global financial system. So I do think this is a moment of reckoning. And of course, all of this hits the emerging markets much, much harder. India, Nigeria, Mexico, Brazil. I'm based in New York. I'm speaking in New York today. New York was hit pretty hard early on. But of course, we have, you can social distance, you can work from home, we've got running water. Most of the emerging markets where Accion works, it is impossible to socially distance. They don't have running water. The public health infrastructure is weak on a good day and is easily overwhelmed. And so we know it's hitting the emerging markets much, much harder. Financial inclusion, Accion is dedicated to creating a financially inclusive world, financial inclusion is resilience. Financial inclusion is all about giving people the tools they need to get through this crisis and rebuild stronger. And think about it, if you're going through this crisis, if you have savings, that's a little bit of a cushion. If you have insurance, that can really help out if you lose your job or have a health emergency. If you can make payments in an efficient, easy way, if you've got a network and you can draw on remittances, and of course, if you have someone who will lend to you, all of these are the basic tools that will help people get through this crisis. And that is the mission of that is our work. That is what Accion is all about. Let me take a step back and talk about financial inclusion and remind you, and again, I know the audience I'm addressing, you're studying all of this, you know this. Here, we can take for granted that we have credit cards, we have debit cards, we have ATMs on every street corner. You can get loans for school, you can get loans for homes, you could get loans to help build a small business, you can get appropriate insurance for your health and for fires and for emergencies. And think about this, most of us get paid on a monthly basis, and most of us have our bills coming in on a monthly basis. And that is so convenient. Our lives are so much easier because of all of those tools. Now take a typical woman living in poverty, and she is a farmer in rural Kenya. She gets paid one time a year at the time of the harvest. She has to make that money work year round. She has to make it work for the entire year, and she doesn't even have a safe place to save. She may have to travel for several hours to make a utility payment to keep the lights on, or a school payment to keep her kids in school. And she can't get insurance, but she lives in an area that has droughts and floods. And she certainly can't get anyone to lend her money to build a business. And she lives entirely in a cash world, which means that even though she may be making these payments, she doesn't get credit for making these payments. She is invisible to the global financial system. She does not have any kind of credit score, and she's not building anything because she lives in a cash world. Our mission, our vision, what Accion is trying to do is really change that and bring those tools to her all around the world. Accion was started in 1961, and it's very, very sad. In fact, Wednesday of this week, our founder, a gentleman named Joe Blatchford, passed away at 86. What Joe started in 1961 was really a private sector Peace Corps that started in Venezuela. And he went into very, very poor communities and really tried to figure out what they need to help themselves. And so our mission of providing tools to help people help themselves goes back to our founder, who had the audacity to think that he could make a difference in the world. The early version of Accion was a private sector Peace Corps. Fast forward a little bit to 1972, we said our clients need more than community development. They need capital. So we started experimenting in Brazil, making very small loans to the poor. Dr. Muhammad Yunus was doing it in Bangladesh. Others were doing it in Southeast Asia. And those are the roots of microcredit, microlending, microfinance. Accion then went on to build nonprofits in almost every Latin American country to make very small loans to the poor. So our work for many years was to build them, help them work on their methodology, raise money, help them manage risk, and really build the early stages of the microfinance industry. Fast forward a little bit to 1992, which was really a seminal event in our field. In 1992, Accion created the world's first for-profit bank focused on the poor, Banco Sol in Bolivia. Now, back then, this was radical and controversial, but of course now it's sort of obvious. Once Banco Sol had access to once it was reorganized as a for-profit, It could access the debt markets. It could access the equity markets. It could hire talent in a different way. It could, later on, it could take deposits. And Banco Sol, which had been doing very well as a nonprofit, took off as a for-profit. So we went back to all of those nonprofits and recreated them as for-profits, and then started to build what are now some of the great microfinance institutions, including Banco Sol in Bolivia, but also Mi Banco in Peru, Compartamos in Mexico. And really that 1992 event is a watershed. Before 1992, all of microfinance was done on a nonprofit basis. And largely, since 1992, most of microfinance, except for Bangladesh, which I could describe, but most of microfinance is done on a commercial model, and it really traces back to this event. And I would even go further than that to say the whole movement around social entrepreneurship and impact investing and leveraging business and the capital markets to have a great social impact. In my mind, a lot of that rests on the shoulders of microfinance, and a lot of that rests on this event that happened in 1992. So I think that's a huge sea change. So fast forward for us, we then went on to build several of the great microfinance institutions in Latin America. And then in the late 2000s, another important event, we had the IPO for Compartamos. I think it was the first IPO for a microfinance bank. And that was, again, controversial, but wildly successful, which allowed us to grow significantly and expand. We were at that stage throughout Latin America, but it allowed us to expand to 10 countries in Africa, India, China, the Philippines, and most recently, Myanmar. Let me just, more recently than that, and let me see if I can do this. We've expanded into fintech. And like every aspect of our own lives, of your lives, the digital transformation of everything is allowing us to rethink every aspect of how we deliver financial services to people who've been left out. So literally, distances that used to be insurmountable, now there's no such thing as a distance that's insurmountable. Transaction sizes that were too small to be commercially viable, now there's no such thing as a transaction size that's too small to be commercially viable. And data analytics are allowing us to know our customers all around the world in ways that we never could have imagined before. And so there's a revolution going on. And what you're seeing in front of you is our Venture Lab portfolio, and you're going to meet and hear more from Vikas. And he is really the managing director and the architect of almost all of this. He's got a great team. But what you're seeing here are, in my mind, some of the most spectacularly innovative companies in the world, all harnessing new technologies to meet the financial needs of people who have been left out. Literally data analytics, the Internet of Things, machine-to-machine technology, global satellite imagery, you name it. We're finding entrepreneurs who are solving real problems on the ground, all harnessing fintech for financial inclusion. And this is an incredible portfolio. And just to give you a little bit of a feel for what's here, at 12 o'clock is a company called Field, which is in Kenya and Nigeria. And what they're doing, and this is especially critical in the middle of the pandemic, they work with pharmacies, and these pharmacies themselves are small businesses, but obviously in the middle of the pandemic, these pharmacies are essential frontline medical workers. And what Field does is it brings artificial intelligence to help manage the inventory of these small mom and pop pharmacies so that they have the right medicines on the shelves at the right time. That's an investment in artificial intelligence that a small store could not manage, but Field can do that for them and deliver those goods in Kenya and Nigeria. Another example down at the lower right, Toffee, is like the name implies, it's bite-size insurance in Mumbai. And Their model also hinges on digital technology. In dengue fever season, you can get dengue fever insurance for $6. When you buy a bicycle, you can buy bike insurance for $6. And now, of course, in COVID, they're now providing insurance if you lose your job or if you have to stay in the hospital. And so they've really pivoted a bit and recreated their insurance model for the pandemic. One more in the middle of the page, Lydia provides free electronic invoicing for small mom and pop shops and helps them to transform digitally. And then based on that, they can lend, and they can lend faster than anyone else will. And of course, the banks in Nigeria don't lend to these small mom and pop shops. And now they are one of the fastest growing online small business lenders in Nigeria today. So you hear the kind of innovation, and I'm sure Vikas will elaborate on this, but in the world of seed finance, generally about 25% of seed-funded companies ever get to Series A, and roughly about 80% of these companies are getting to Series A. So I've said to Vikas, that means we're either really good at finding these companies, really good at helping these companies once we find them, or living in a fintech bubble. And the answer, of course, is probably all three, but I really think we're on to something very, very important and very, very exciting here. The next page is our partner. We helped create Quona, which is the same thesis. This is fintech for inclusion, but much larger companies at the early and growth stage. And the innovation here is we created the world's first global fintech fund for the underserved. And what we're trying to show here is, again, the same thesis, harnessing the innovation, but what we're really trying to show is the fund itself, that you can have as we've done in microfinance, we're trying to do with fintech, we're trying to show that you can have a huge social impact and a great financial return, because what we're trying to do is drive capital into this sector and show that, again, you can have a big impact and a great return. And again, it's the same innovation, and these are sister efforts at the seed level and at the early and growth stage level. And you even see a couple of names that are similar, where Quona had the chance to invest in something that Venture Lab had already found. I'll give you one example at the bottom of the page. All Life is the world's first insurer for people diagnosed with HIV. And in South Africa, it's a South Africa-based company, you can't get a mortgage if you don't have insurance. And so, and unfortunately, there's a very significant population, not just in South Africa, but in much of Africa. And so All Life is truly meeting a need and truly bringing people, helping to include people that have been excluded. Just to give you a full sense of our work and our strategy, especially in the pandemic, this is our global investments portfolio. And what you're seeing here, these are much larger institutions. These are licensed, regulated, deposit-taking banks and microfinance institutions, all of which are on some path towards digital transformation. These are existing financial service providers, where the first two pages are all about innovation. This is about working with institutions that have been around who are now trying to figure out how to leverage new technologies in order to make themselves more efficient and expand their product set and reach people that they haven't been able to reach before. And though many of these are traditional models, I'll point out one at the bottom left, Civico. You all are familiar with Yelp. Civico is basically Yelp with embedded financial services. So you'll go on to Civico. Civico will actually map the city of Bogota and literally put small mom and pop businesses on the map and then drive traffic just like Yelp does. If you want to go to a coffee store, you look at your app and you find out the local coffee store, but then you can go into that store and pay for that cup of coffee with the app. And then as the volumes grow, Civico can lend to that small mom and pop shop. So it's a way more complete service than Yelp, but you get the idea of it. And the next part of this is our global advisory solutions. And as I said, all of these companies are trying to, are working through their own digital transformation. And we have a team of about 50 people around the world who are experts in the digital transformation of existing institutions. And obviously, especially in the pandemic right now, all of these, basically the financial service providers that are further along the journey of digital transformations are the ones who are better capable of serving their clients in the middle and getting through the pandemic. This is a complicated time, but again, we're bringing new technology to help all of these institutions deal with their clients digitally and figure out how to originate loans and figure out how to collect loans. And I do think that the pandemic is a very challenging period, obviously, but the ones that are what used to be nice, it used to be that these institutions were trying to it was sort of voluntary. It was like, gee, technology is something we should invest in. And now it is urgent. They understand that they can't really succeed without significantly retooling their operations. The last part, well, two more parts of it, just so you have the full range of our work and our strategy, is we've created the Center for Financial Inclusion, which is the leading think tank in financial inclusion on a global level. And as you can imagine, we've switched a lot of our research to now focus on the pandemic's impact for investors, for regulators, for clients. We also partner with the Economist Intelligence Unit to rank countries on who is doing financial inclusion well and who's not. And we do a steady stream of what I think of as very, very high quality research on the issues and challenges to help create a financially inclusive world. And the last part, just so you have the full lay of the land, is our work in the United States. We've created the Accion Opportunity Fund, which is the largest CDFI, Community Development Financial Institution, in the United States by far. And over our 30-year history, 90% of our loans have gone to entrepreneurs who are Black, Latinx, women, and immigrants. And so obviously the combination of both the pandemic and the impact on small business, as well as the racial injustice that has really come to the fore, our work in the US is probably more important than ever, but that's for a different seminar that's not focused on international. I'm gonna stop with the slides there and go back and just say, this is the crisis is changing the world. It has changed the world. I do think financial inclusion is critical to helping our clients, helping our partners get through. And I do think a lot of it is about digital transformation. I think the companies that are, the partners around the world that are more likely to get through this period are the ones that are further down this track. There are, though obviously the impact is enormous and devastating, there are a few silver linings to the pandemic. So for example, as I mentioned, it used to be that some of these institutions thought about investing in technology. Now all of them are urgently investing in technology, which will strengthen many of them. It used to be that insurance was an abstract concept that was very difficult to understand. And now I don't think there's a single person in the entire world that doesn't understand the value of insurance. It used to be that many of the world's poor chose to continue because they felt comfortable living in a cash world. So even in places where they had phones and they had opportunities, they didn't use them because they were comfortable in there. But now there's no one in the world who would, if they could transact digitally, they'd prefer that to working in cash for all the obvious reasons. So there are some significant changes and breakthroughs and obstacles that I think are going to accelerate the transformation, the digital transformation, and really accelerate financial inclusion. I think people really understand that financial inclusion is resilience, and these are the tools that will help people get through the pandemic. Plus, and I'm sure Vikas will elaborate more on this, we are living through the golden age of new technologies. And I do think Accion and Venture Lab in particular is set up to find them, harness them, and deploy them to the mission of financial inclusion. And I think all of that, again, is sort of accelerating the pandemic. And the last thing I'll say before wrapping up and bringing in Vikas into the conversation is you and your role. I think, again, SAIS plays an enormously important role, but studying international affairs and at this moment in time, the world could not be more complicated. These issues are enormous. I think whatever brought you to SAIS, I think you're entering the world and entering this field at a critically important time. So I'm going to stop there and then bring in my friend and my partner Vikas, and then we're happy to chat and take some questions and answers.
Thank you so much, Michael, for that extremely informative presentation. I like how you ended with the highlights in our role. So now I'm going to hand it over to Vikas to go over his response and talk about his role at Venture Lab.
Thanks, Brendan, and thanks, Michael, for that for those words. I only have a couple minutes here, so I'm just going to reiterate some of Michael's points, and then I'm excited to hear everybody's questions. As Michael said, so I work with Accion Venture Lab. We are the seed stage fintech for inclusion investor within Accion. We invest in early stage startups all over the world that are using new technologies, new business models to expand access to, improve the quality of, and improve the affordability of financial services for the underserved. And Michael sort of touched on this. I mean, our thesis is ultimately that digital penetration has outgrown financial services penetration in many markets around the world. And that there is an opportunity in that delta to essentially use digital and the access and data points it creates to finally serve the world's underserved, the 3 billion consumers around the world that don't have access to a full suite of financial services and who have historically been considered too expensive to serve by the sort of incumbent mainstream financial system. I think this is more true than ever in the wake of the COVID crisis in terms of the data and distribution points that are being created as much of the world moves to living and working digitally. In terms of our core thesis, we really start with the startup. We think they are the greatest initiators, sort of testers of innovation. They create products that actually matter for customers because it's the only way they work. It's the only way to get off the ground. You have to be able to sell a product. So they get to customers affordably and efficiently because they have very little capital to cover high fixed costs and high costs. So our job is to support those companies, supporting innovation really where it matters most. And practically what that looks like is we look like a venture fund. So we provide investment capital, usually equity or convertible debt, typically $400,000 to $500,000 in our first investment to our companies. We're coming in at the earliest stages. So these are companies that really need money. They also need support. So we get very involved from a governance perspective, from a sort of post-investment support perspective. And then we really try to formalize and institutionalize these companies so that they are attractive to later stage investors, mainstream investors, impact investors. We've invested about $27 million across the Venture Lab. Our work as Venture Lab over now several years. Our companies have raised well over $400 million. We have numerous exits at attractive valuations. So we have some evidence now that this model is working. And then maybe I'll just say a couple minutes on sort of where we are now. As Michael said, this is an unusual moment for the convergence of sort of fintech and financial inclusion. Since March, we've seen a dramatic shift in the lives of the underserved, and I think you can wrap that up by saying their lives have been made increasingly vulnerable and increasingly sort of digital and remote. And Michael shared some of the statistics around vulnerability. Over 100 million individuals potentially pushed into poverty. The statistic was shared on Tuesday night on the debate stage. 1 in 5 small businesses in the United States have shut down as a result of this crisis. So the effect on the financially vulnerable has been significant, devastating. They're also, the lives of low-income consumers, underserved small businesses are also increasingly digital and remote. Physical services are unavailable or unsafe. Travel has largely ceased for all of us on this phone call, as well as many of the individuals that we care about that we're trying to serve. And at the same time, life has moved online. There's 35% higher online banking usage globally since the crisis began. Actually, somebody just sent me a statistic as I was listening to Michael speak in The Economist that came out today. Bain did a global survey and they found that 95%, there's a global survey, 95% of consumers plan to use digital banking after the pandemic. Small businesses are looking to go digital. They're enabling sort of e-commerce so that they can continue to sell goods. So what that means for us is there's this sort of massive acceleration of the digitization of the world as all of our lives move online, which means there's this really rare opportunity to support financial inclusion via fintechs, which I could simply wrap up by saying that the data and the distribution tools that allow fintech operators to better serve the underserved are more relevant than ever. That sort of makes us, in light of how challenging the world is right now for low-income consumers, excited about our mode of intervention as impact investors and as development professionals. So I'll give you a couple quick examples of the sorts of things we're excited about right now. We're looking at a lot of what we call plat-fin businesses, platform fintechs. So companies like Field that Michael mentioned, that are taking sort of broken, inefficient supply chains, particularly in agriculture, food, health, pharmaceuticals like Field. They're digitizing various links along that supply chain because it's frankly an imperative in the time of COVID, like e-commerce or inventory ordering and delivery. And then they're looking to provide financial services on top of those sort of newly digital links. We're looking at a lot of sort of blank as a service companies, whether that's fintech as a service, lending as a service, insurance as a service, companies that are letting companies that previously might not have thought of themselves as financial services companies, but now are becoming more digital, themselves provide financial services. So you can imagine a company like Field partnering with a fintech as a service company to provide credit on top of their pharmacy deliveries. On the credit side, we're really focused on companies that are using technology to construct and validate new assets for secured lending. So everything from cars in Colombia to land parcels in Brazil that can be used to offer secure, affordable credit during this time. And then finally, we continue to be very excited about insurance technology companies. Michael mentioned a company called Toffee that we've invested in India. What's become abundantly clear is one of the core issues that we always tried to solve for when we looked at insurance businesses was a lack of or misunderstanding of the value of insurance amongst large masses of the population in the markets where we invest. COVID has changed that. A lot of the businesses that we either look at or have invested in are seeing a big upswell in understanding and appreciation for a product like insurance that can really protect you from a shock. So there's a massive surge in demand, and a company like Toffee is really well placed to provide products that really matter to consumers at this time. So I can pause there. Look, we're seeing a real explosion in opportunity to better serve the underserved using fintech in this moment. We're seeing a lot of really exciting companies, and happy to answer questions.
Thank you so much, Vikas, and thank you, Michael, for your presentation. So we're now going to open the floor for questions and answers. Just a reminder to everyone, please type your organization and your questions in the feature, and which panelists you are addressing. We already have some in the Q&A box, and I will begin reading out the first one. The first question is from Chloe Adcock, who is part of the SICE MA program. She says, I've always understood microfinance and financial inclusion as being high touch, person-to-person financial solutions, with a strong emphasis on social bonds and norms, helping to ensure repayment. One example would be savings groups. Does Accion do that model of lending, or is it factored into their strategy at all? What is the future of financial inclusion? Is it low-touch fintech?
So I assume that's for me. Yes. So your view of microfinance is accurate, but from years ago, the roots of microfinance are in many places around the world group lending, and yes, some of our partners are still doing group lending and saving groups and things like that. But almost all of those. Almost all are now embracing new technologies because, in fact, our clients all around the world do have cell phones, and they, if you have to spend hours going to make a single payment, but you've got this thing in your hand and you could just do it immediately, there's a demand for it among the base of the pyramid. So everybody is responding to that. So I do think that most microfinance institutions do start off and have started off as being overly labor intensive and overly paper intensive. And all of them have been moving away from that over many years. And in fact, as I described, much of our work is helping them move away from that. I'll tell you a story. I went to Myanmar a few years ago, and we've now got a partner there. When we went there, the loan officers spent 4 hours every day doing paperwork. And this was several years ago. I was very careful because I didn't want to make any promises we could not keep. I said we could get that down to 20 minutes. And sure enough, like 18 months later, that was down to 20 minutes. And that's not even advanced technology. That's like just bringing them up to global standards. So there, but let me just say something different. The entire microfinance industry, which is a global industry that we are very proud to have helped to build, serves today I've seen different estimates, 150, 200 million people. But what Vikas is describing and Venture Lab and harnessing this kind of technology, these are early days, but it's this kind of technology that is going to help us reach 3 billion people. I do think we can work very hard to make those existing microfinance institutions faster, better, smarter, and help them get to greater scale. But the real breakthrough stuff are these fintech companies that can get to much greater scale and really help us to reach 3 billion people for whom the global financial system fails.
Yeah, I would just add to that fintech need not be low touch. And in some ways, actually, Chloe, you're sort of hitting on one of the core sort of challenges of fintech for inclusion, which is how can you with a mobile phone, with a smartphone app, replicate the level of trust, sort of credibility, sort of the knowledge you generate from being with somebody, having a loan officer in somebody's home or in their neighborhood. How do you replicate that when you are interacting with somebody via a phone or a smartphone app? And that's a big part of how our companies innovate. It's a lot of what they think about. They do that via things like mixing chatbots with call centers. They do that by having agents that go out on the ground, but maybe don't do it as much as a microfinance loan officer would. They're sort of very targeted on a check-in once a month, and the rest of the interaction happens over WhatsApp or over a smartphone. So we wrote a paper called The Tech Touch Spectrum that talks about precisely this. Depending on the customer, depending on the market, it won't always make sense, even for a quote unquote fintech, to be entirely digital. And you know, and Michael talked a little bit about how microfinance institutions need to become more digital. There's probably a meeting in the middle for the fintechs as well to really get to the point where there's some offering for every different kind of consumer, an appropriate offering for every different kind of consumer around the world.
Thank you for that. And you hit on briefly some of the challenges of fintech. We have a few questions relating to that. The first of which is from Charles Codwell. He wants to know, what are the obstacles to expanding to serve some of the world's poor? Licensing, regulation, etc. I would like to also add on to that and talk about data. What are the biggest problems with some of the data that you see with fintech? Is it unregulated use? Is it unrealized potential? Where do you see data going with fintech and to solve to increase financial inclusion for the world's poor?
I'm happy to start. I do think, as was in the question, there are regulatory obstacles, and regulating financial inclusion is very, very hard. If you think of the world's regulators, you have to assume that they are all completely understaffed, stretched ridiculously thin, and not exactly experts in new innovative technologies. So I think it's a very hard job. We do, as I mentioned, we partner with the Economist Intelligence Unit to create global transparency. We rank 60 countries all around the world on who's doing this well and who's not doing this well. And every year it gets more and more sophisticated as the world of financial inclusion gets more and more sophisticated. So what we're trying to do is, it's not just name and shame, but it's also, if you're a regulator and you want to know who's doing agent banking regulation best, you can just look it up here and then you can call that person. So it's a way of encouraging raising the regulatory standards. But if you ask me the top of the list of obstacles, I would talk about, frankly, the reason we created Venture Lab in the first part, which is the pioneer gap. We see, and you can see on that portfolio map, spectacular innovation. It is incredibly hard for these innovators on the ground in the emerging markets to get the capital they need. I always, actually, Vikas, you can answer this question, but I always say we're almost always the first money in beyond friends and family. And I've always wondered if I need that caveat. Are we always, or are we almost always? But I'll let you answer that in a second. But the truth is, we have worked at this, and really, Vikas and his team have done this, where they've worked very, very hard to find these companies and help them. And now I think these companies are finding us because we are willing to invest earlier. And what we're trying to show is that you can have a great impact with these innovative companies. But I think if I had a magic wand, I would like to educate the world on the investing opportunities and sort of solve this pioneer gap that really Vikas and Venture Lab are trying to solve. I'll turn it over to you.
Yeah, no, I entirely agree. I think, well, look, there's many obstacles, but I think capital is a big one. It's capital at our stage to support innovators, and that's equity capital that we provide, but also debt capital. You know, more than half of our portfolio is lending companies. Lending companies can't build their businesses around equity capital, so they need debt. And actually, the debt gap for early stage alternative lenders is arguably an even bigger problem. So there's a big sort of capital gap still, despite the fact that we've been working for 7 years. We can't be big enough to solve this. Others have to come in and be a part of solving this problem. You also asked a question, Brendan, about data. Yeah, I think look, there's a new data, and the data that's created by all of again, as I said earlier, our lives moving increasingly online, and over the last 6 months, sort of that going into hyperdrive, is a key piece of financial inclusion. But it's not enough just to get a bunch of data and then figure it out. Some data is more valuable than other data. Some data is more accessible than other data. Over the course of 7 years of looking at alternative data businesses and looking at lenders that use alternative data, we still haven't necessarily come yet to a set of companies that really can use some of this sort of messier social media data and things like that to really give you an indication of willingness to pay and ability to pay, which is really what you need to look at to underwrite a potential loan. A lot of the really valuable data is still cash flow data. It's a track record of payments. And that's not always readily available in our markets. It's part of why we're excited about things like plat fins that I mentioned earlier. Because when you're a plat fin, when you're delivering a product to a small business retailer, and then they're paying you for that product, you have a cash flow record. You're literally sitting in a flow of payments that you can underwrite. Just getting that retailer's social media footprint probably would not be enough. There's certain markets where we invest that have actually, the government have done some of the work to get that cash flow data in front of underwriters, in front of credit providers. So we have a company, Confio, in Mexico that leverages an invoice database that the Mexican government sort of insists on for transactions above a certain level. So Confio can go in and actually pull transaction data for a potential small business borrower, and they can underwrite against that. That sort of data is not necessarily available in many of the markets where we invest. We have to our companies have to figure out how to get to it themselves. So I would say, data is critical, but great data is not uniformly available.
Just to jump off that, having this data, is there any way that you protect it or mitigate threats from cybersecurity or international regulations? What do you do with this data that it's so helpful, but it's also so risky to have?
Well, go ahead, Michael.
No, go ahead.
Don't forget, we invest in companies. We have to think about how to make sure that our companies are being responsible about the data they collect, what data they collect, and how they keep it, and then how they use it. And we spend a lot of time with our companies. We actually have multiple guides online that sort of help guide our companies through this, making sure they have good data security policies in place, making sure they're being very transparent with customers or prospective customers about the data that they're collecting. And then also making sure that they're only using the data they need to make a decision. There's a tendency, I think, among some sort of early stage fintechs, particularly in the consumer lending space, to just, I'll take it all.
Yeah.
I'll throw it in the black box. Maybe some stuff works, some stuff doesn't. But then, in markets outside of the US, where there's very strict regulations around this, that really raises the risk that you're including metrics in your credit decisioning that we wouldn't want to be included. So Brendan, it's a big issue. It's going to continue to be an issue as the volume of data sort of continues to explode. I think the role that we try to play is one of urging responsibility and sort of caution.
And I'll just add to that, the Center for Financial Inclusion has been a real pioneer in consumer protection. In fact, created the world's first consumer protection standards for the base of the pyramid, and has really worked hard to, and is working hard to take those consumer protection principles and bring it into the modern world of data and digital transformation. I think, Brendan, you've asked sort of one of the key questions, and if you look around the world, there is the European model in GDPR around privacy. There is a Chinese model that is frankly big brother and has all sorts of different repercussions. And then there is USA, the American fair lending, because described as blacklining and making sure that algorithms are not discriminatory. And it's not quite clear. The world is really, I think one of the biggest public policy issues we have is the explosion of data and the responsible use of data. And I think it's easy and different in different cultures, but I think we need, as a society, to figure out there are data and data analytics, the ability to understand this data, is allowing us to see billions of people who have until now been invisible. So it's huge and transformational. That's the good. But we all know there's a lot of bad of privacy and, again, Big Brother. And so I think as a society, this is one of the central issues of our day. How do we get the good that can come from data and data analytics without the bad?
I think that's a great segue into a question we have from Reed Dodbell, a student here at SAIS. He wants to know do you find tension between creating profit and return to investment and improving financial inclusion in the companies in your portfolio? Is your investment thesis financial success and expansion, or will it be by extension to improve financial inclusion?
So that's a great question. And I'm very quick to point out that in the world of social impact, if you're talking about clean water and education and health, I do think there are real trade-offs between impact and profits. In our particular space of financial inclusion, you've heard the kinds of companies that we're finding and supporting. These companies are early stage startups. Some of them are going to fail, but if they succeed, they have the chance to change the world, and it's more binary in our space. These companies, if they succeed, will have an enormous social impact and great financial returns. I think that's a little bit unique to financial inclusion as compared to some other social impact investments. So in our portfolio, I don't see that trade-off at all. I don't know if Vikas wants to elaborate there.
I totally agree. I mean, we do think a lot, of course, about impact risks when we're investing in companies, and we think a lot, and we really make sure that the product or the service that our prospective company is providing is sort of inherently impactful. It's serving a customer that we care about. It's we think it's, and as Michael said, it's truly game changing. It is so innovative that whether it succeeds or fails, it has the chance to improve the world by its example. That it's providing a product that is responsible, appropriately priced, transparent. But if it fits those sort of core criteria, we invest and we try to allow them to scale profitably. And we do think that we don't think there's an inconsistency there. We think actually our companies that are doing incredibly well means there's real demand for a product that we think is ultimately good for the end customer.
As the product is so game-changing, we have a question from Ali Khan Alani asking, what does it take to take part in this fintech ecosystem? Is it a smartphone? What do you do to mitigate people who don't have access to 3G or 4G? And how are you getting to these underserved populations?
You know, of those 3 billion people who are left out of and poorly served by the global financial system, something like 80-90% have cell phones. It's something like a much smaller percent, 20-30% have smartphones. I think there is a lot you can do without smartphones, and we're trying to meet our clients where they are today. Obviously, progress of moving from 2G to 3G to 4, that is enormously enabling. But still, in parts of the world where we work, maybe years and years away. That said, I mentioned we're now working in Myanmar, and part of what we're interested in, Myanmar, for those of you interested in international development, has the fastest, for a developing market, it has the fastest rate of smartphone adoption. So generally speaking, the developed world has 80-90% smartphone penetration. The developing world has 30-40% smartphone penetration. Myanmar has 80-90%. And the reason is because they started so late. They basically were left out of the world for 50 years. And if you were going to start now, you're not going to build 2G. You're going to leapfrog straight to 5G. So part of why we're interested about working there, and Myanmar is a complicated place, as this audience knows, is because ultimately, I do think longer term, smartphone adoption is critical, is enormously enabling. I think there's so much we can do between here and there. But yes, that is the longer term vision.
Just to jump off that, and this will probably be our last question in the interest of time. Alakan asks, how does Accion engage with design thinking? As trends seem to wax and wane, what do you think design thinking and design planning in your new portfolio for internal and external projects will look like in the future?
I'll start with that, and then Vikas, please elaborate. We have, so I mentioned we have a whole team of global advisory solutions. They're consultants who basically work with existing institutions around the world in order to develop new products and new systems to reach people. And they have a whole practice in client-centered design, because I do think figuring out what our clients need is a big challenge. And so, yes, I think design thinking is a radical innovation that, just like all this technological innovation, I think really working through client-centered design is critical to making the right products for the right for our market.
Yeah, I'm not an expert on design thinking, so forgive me if what I'm about to say trivializes it in some way, but I do think that, I mean, I understand design thinking as understanding a user, iterating quick, providing a product or a service, understanding the user, iterating quickly, sort of challenging the core assumptions that allowed you to provide that product in the first place, continually changing. I think that's how startups work. I think startups that use an old concept and then insist that their customers will like it will fail very quickly. Yeah. You have to be a design thinker to be a startup CEO, particularly in our space. I think it's a principle that's really important, particularly as you look at older or larger organizations that are trying to evolve into our sector, into serving a new customer well. But I actually think design thinking underlies, and I know there's a lot of sort of methodology and science to it, but I think it underlies, whether they know it or not, a lot of the work that our portfolio CEOs already do.
Thank you, Vikas, and thank you, Michael, for your time, your answering your questions and answers, and also thank you for fostering the SAIS-Accion relationship that you guys have over the years. The SAIS and IDEP community are extremely grateful for the time that you've given us today, and your remarks and insight, I'm sure, will facilitate greater conversation and learning in the future. With that, this is now the ending of the remarks. I would like to thank you guys again and all the attendees for joining us today. Please join us on October 22nd for our next development roundtable with Dr. Marie Ruel at 12 p.m. Thank you so much. And with that, goodbye, everyone.